Well, we're continuing on with our coverage of the top 5 financial news stories of 2017. We find ourselves at number 2 on the list, and something I would consider to be probably prudent to everybody out there, and it probably affected your portfolio to the upside. That's for sure. I would imagine almost everybody invested in the marketplace was able to benefit from our number 2 news story, and that's the reason why it finds itself in second place and not in first, but we'll cover why first was first when we get there. I'm Cody from Wall Street Breakdown. Thank you again for joining us. I hope your New Year's Eve was outstanding and everybody had a nice, safe, fun time. Story number 2 in the markets was the markets. That's correct. I'm not sure if you were maybe living under a rock in 2017, but the Dow Jones, the S&P 500, and the NASDAQ indexes were all up substantially. There's just no two ways around the fact that if your portfolio wasn't making money, I would wonder almost what you were invested in. We've talked about speculative stocks in the medical marijuana industry, cryptocurrencies, everything seemed to be up. And most people would probably find themselves invested, in the most part, in stocks that encompass, especially the S&P 500, but you were probably in the Dow 30 index, you probably found yourself in the NASDAQ or the NYSE, but all those were up and up substantially. Let's take a look back at 2017 and find out just how much they were up and what companies really led the charge to bring these indexes up just so drastically throughout the year of 2017. The Dow Jones ended the year up 25.1%. The Dow Jones 30 had some seriously excellent performers, and there was very, very few laggards. In fact, only 5 of the 30 companies that make up the index didn't actually make gains, and we love making gains. So 25 of the 30 were doing outstanding work in an outstanding economy, but a couple of these companies did some stuff that was relatively off the charts in regards to the growth that they sustained throughout the entire year. Considering a lot of these companies are well entrenched already, make a lot of money, but already have people predicting what their price is going to be, they still seem to find a way to make percentage gains in their share price that was almost unheralded. Some of the big gainers were Boeing, obviously, at the number 1 spot. Boeing up 90% to end out the year. 90% gain for Boeing. They started off the year with a bit of a revenue and EPS tough quarter. In the first quarter, they said they were going to lay off a couple hundred employees, but that didn't seem to slow Boeing down. They were having excellent sales of the 737 MAX mid-sizes and the 787 Dreamliners. They booked a whole lot of sales from both of those planes, and the fact that their backlog is just so substantial already just goes to show that airline companies out there and the governments that do business with Boeing are more than willing to wait for a company that makes such a substantial product. They are definitely the number 1 company from 2017, led the Dow 30, and they did excellent work. They were 95% gains if you consider the complete net profit you would have made, including dividends. That is unbelievable from Boeing. Like I said, when you consider that at the beginning of the year, there was a little bit of trepidation. They weren't coming off the greatest 2016 as far as share price increase, but they more than made up for it this year. 20% dividend increase going into 2018 as well. You gotta like that, right? So anybody that's already holding on to Boeing, I don't know if I would necessarily jump into it now. Very, very pricey stock to get into. Obviously, if you're buying a basket of stuff through an ETF, one of these index funds, you're going to get a little piece of Boeing. But anybody who's been holding on to Boeing through this run and continues to hold on to Boeing, you've got to like the fact that they've hiked that dividend another 20% going into the new calendar year. Caterpillar, the number 2 gainer in the Dow Jones 30. Cat was up 70%, 75% if we count in dividends. They had great third quarter EPS, tripled the third quarter from 2016. That in and of itself is pretty unbelievable. And when you consider the oil and gas industry making a strong comeback in 2017 throughout the United States, we looked at a lot of the Baker Hughes drilling rig and natural gas rig starts that there were. We had a 24-week run where both rigs were up every week for 24 weeks. It was really good for Caterpillar, not to mention China continues to grow and does a lot of business with Caterpillar. They had serious GDP growth over and above forecasts in China. So Caterpillar was definitely a beneficiary of that. And the trickle-down effect is you, a shareholder, ended up becoming the beneficiary of that as well. Caterpillar had an outstanding year. And as the home builders in the S&P 500 index continue to do really, really good business, that just bodes extra well for going forward into 2018 with a bolstered economy, some tax rates that have been cut. Caterpillar does a lot of business in the continental United States, so Caterpillar probably will continue to benefit going forward, and that's good to see. We love to see companies doing so well. These American companies, very, very strong. Obviously, the manufacturing industry has been picking up to a rate that's been unseen in many, many years, right? 15 years, I believe they said in November. It was the biggest increase in manufacturing in 15 years. Companies like Caterpillar definitely are the ones that are benefiting from that. The other big gainer in the Dow 30 was Apple. Apple started 2017 with the trickle of the iPhone 7 and the iPhone 7 Plus that were doing very well. But the problem was that as 2017 rolled on, I think there was a lot of talk about issues with the new iPhone 8, the iPhone 8 Plus, and the X. There wasn't so many talks about the iPhone Watch or the iWatch or the Apple Watch, whatever it's called, not doing as well. But the iPhone 8, the iPhone 8 Plus, the iPhone X, they were considered to be potential problems, mainly because a lot of the component makers were really backlogged with stuff we've covered before, DRAM, and like all that stuff that ends up becoming pieces of that. I know they had a lot of issues with the OLED, which I think is why they've probably moved on to LG as opposed to relying on Samsung. We're going to see that happen sometime in the middle of 2018 as they convert over to using LG as their supplier as opposed to Samsung, but that didn't happen. No, the sales for those were excellent. They had an excellent last quarter in the year that they reported in November. Great retail sales throughout the Christmas season. Apple was a major beneficiary. Apple up 47%, 49% if you consider dividends. Services like the Apple Store, the iTunes, Apple Care, Apple Pay, and all their licensing departments were all up in significant numbers over where they were the year before, and that's what you want to see out of a company that's definitely growing. Apple keeps their business very, very streamlined. They don't have a whole lot of products, but they do spread themselves out with a lot of the services that they keep offering, and those services are growing at a rate that is excellent and benefiting anybody who's invested in the Dow Jones 30. Moving on to one of the other big marketplaces, the NASDAQ. Man, did the NASDAQ see some big gains this year, up 28.2% overall throughout 2017. It's pretty tough to not enjoy taking a look at these numbers, to be honest with you. When you take a step back and think about all the people and all the hype in cryptocurrencies and medical marijuana, and there's a whole lot of speculative stuff that's out there. You take a look at the index funds, the stuff that you would own just to keep your portfolio nice and diversified. A lot of these you could get into at very, very low MERs. And if that was the case, you made out like a bandit in 2017. We'll break down some of the companies in the NASDAQ that did really well. Align Technology leads the way, up 131%. Take-Two Interactive, video game company, up 123%. Vertex Pharmaceuticals, up 103%. Mersado Libre, up 102%. Wynn Resorts, that's the guys that make all the casino resorts and stuff like that. They're doing very well, up 95%. Micron Technology up 88%. PayPal up 87%. Nvidia up 82%. What a year, honestly. Can we take this all in for a second and just be thankful that we're a part of 2017, that we were there in the marketplace? I'm sure you were there, I was there, and what a year. The best year in the markets, definitely growth-wise, since 2013. But when you consider some of the benchmarks we broke this year, you just think about the fact that not only the Dow and the NYSE and the NASDAQ and the S&P, they crushed records. Record over record was broken. They also had record number of record days. So it wasn't just a matter of the actual record that was broken and continuing to top themselves. It wasn't a 3 or 4 month consolidated period of things being beaten. This was throughout the entire year. We had one down month in the entire year, and that down month was only down about 0.9%. And then when you consider in dividends paid, the actual net profit from all that still was up. So 12 straight months of gains across 2017. It is really difficult to say that it was a bad year in the marketplace. I would imagine a lot of people out there really benefited from this, and I'm happy for you guys. I hope you allocate your money properly, diversify going into 2018. Things from 2017 will obviously not be mimicked in 2018. There will be different gainers, there will be different losers. Things will change. A lot of these companies that are doing really well already, that have had very, very good runs, have their stuff priced in for 2018. Let's just remember that, right? So a lot of the companies that are up, they might be up a little bit substantially, knowing that A, EPS is going to be up on a lot of these companies with tax reform, and B, that when you're doing really well, people are, they're using their crystal ball to assume that there's going to be extra gain in the future. So a lot of these companies that are up substantially will not probably be the gainers that end up being up in the following year. So let's just take that into account. Don't just let it ride if you're in a lot of these individual companies. If you're in the indexes, I think you're definitely in the indexes of the right country right now, the United States, doing marvelous work. A lot of these companies do a lot of work internationally, but the economy as a whole in the United States, for the companies that are just specific to the United States, you're in the right marketplace. But please, do your due diligence, speak to your licensed professional advisor. The S&P 500 index, which it encompasses the Dow 30, obviously, companies from the NYSE and the NASDAQ. So we'll just cover that really quick. The S&P up 19.4%. Again, 500 companies encompass this index, so it's a lot more opportunity for some of the laggards to pull that percentage down. But still, if you 19.4%, if you went to your portfolio manager, financial advisor, and said, get me 15% gains next year, which is not a number you could ever call, to be up 19.4%. And when you consider the MER at a really good company, probably 0.75 to 1%, maybe you're making out like a bandit. You then take into consideration inflation under 2% for last year. So your time value of money stays really strong. Even being in the S&P 500, you would have been up 16%, let's say. That is a very, very good year. Some of the companies that were up the best, tech stocks as a sector, overall up 34%. We covered that in topic number 5. A lot of the semiconductor companies were up just, it was unbelievable, right? I think we all know that. It was unbelievable. And you take into consideration the Apples and all that. Everybody was running with the horses. There was nobody that needed to go to the glue factory. Everybody in the top end of these indexes were just, it was unbelievable. And it's really tough to not just be excited about it. I know I'm excited about it, looking back on the 2017 performance of a couple of things that I own. Things ended up really well. I imagine they ended up really well for you. The telecom sector was definitely the laggard as a whole. They were the sector that kind of pulled things down a little bit. Not a lot of movement there. We've got this Time Warner AT&T deal that's still going on. Verizon not doing a whole lot. Sprint not doing a whole lot. T-Mobile pretty much the only telecom company that really had a really strong 2017. But again, they're allowed a couple of things that they wouldn't normally be allowed for competition's sake to do. So a little more aggressive advertising and stuff that once they start to get caught up to the other three, that aggressive advertising is definitely going to be taken off the board as a grace to them, where they're allowed to, pull customers away and do some things that AT&T and Verizon and Sprint aren't allowed to do in the industry. Some of the big companies in the S&P 500, NRG Energy was the leader, up 132%. The previously mentioned Align Technology, which is in the NASDAQ, was up 131%. Veritech Pharmaceuticals up 103%. Wynn Resorts, 95 up. Those are all NASDAQ companies, but wow, let's just be happy. Let's be happy that 2017 ended up as good as it did. I was happy to be here. I'm having a heck of a time. I hope you guys are having a heck of a time. We understand there's going to be some of this, right? Things are going to move around. You're going to have some up. You're going to have some down. Some of these years, we're probably going to sit here and we're not going to be having the nicest of conversations. And we're going to be bemoaning the fact that maybe our portfolios didn't perform the way we wanted them to in 2017. I hope you were able to bask in the fact that things are doing so well. I hope you appreciate the time and the place that you live in, with the opportunity that we have with the internet, the way that we're able to communicate, the way that everybody's able to share ideas and things get to you very quickly, and you're able to understand what's going on in the marketplace. There's a lot of people out there willing to teach, trying to help. The understanding is that these markets in 2018 are gonna continue to be very strong. But again, a reallocation of some of your money in your portfolio might be in the cards. I want you to sit down and speak with your licensed professional advisor very soon here and make sure that you are prepared for any kind of changes that might be happening. If you were in a lot of these gainers, I would imagine you've probably taken a little money off the board, but don't be taking that money out for income. That is not what this is about. Preservation of capital, and then making sure that you continue to use that to well diversify and build up your positions properly. If you're invested in the market, anything other than a broker, an institutional investor, if you're a retail investor, which is who we try to speak to here at Wall Street Breakdown, we want to make sure that you are preserving that capital and reusing that capital to continue to grow your account. There are going to be up years and down years. Please bask in the up year, pat yourself on the back, remember that your economy is doing so well, and be thankful for the time that you live in. I'm Cody for Wall Street Breakdown. This was number 2 in our financial news review of 2017. We thank you for joining us. Please hit the like button for this video, subscribe, notification bell, comments. Let us know what you were invested in. We love hearing from you guys. Our audience is of the utmost importance to us. We want to make sure that we're covering everything that you want to see covered. If there's something more, something less, if you don't like the cut of my jib, maybe I'll grow a mohawk, I could get rid of the glasses. Whatever it is that you want, we can cover it for you, but we want to make sure that we're bringing it to you, and we're bringing it to you on a regular basis. I would imagine that you could probably look forward to us being here, bringing you videos for every trading day of the year through 2018, barring, I don't know, any type of Godzilla attack, which I just don't see on the horizon. I hope 2017 was a marvelous year, and we hope 2018 is even better. Have yourselves an outstanding 2018.